Hello, everybody. It is great to be here one more time today. And my name is Gary Fowler, and I would like to welcome you to Simplenight Presents. I'm a 17-time serial entrepreneur with 7 unicorns under the belt. I was on the original management team at Click Software, which was sold to Salesforce for $1.35 billion, and also Eva.ai, an AI HR tech company that I co-founded with Dr. David Jang. We believe that intellectual capacity is evenly spread around the world, but opportunities are not. So with that, I'd like to introduce you to my incredible guest that I invited. Guillaume Kloof is a serial entrepreneur and investor. I mean, he's got a wide background, everything from startups to being a visionary leader with a passion for fostering innovation and driving the success of startups worldwide. He's currently located in the Netherlands, and he's a managing director of Valley Data Tech, a renowned tech consulting firm. He's dedicated his career to empowering startups through strategic growth initiatives, including capital raising and market expansion. His insights and hands-on approach have propelled numerous, and we're going to talk about this today, emerging companies to achieve remarkable milestones and realize their full potential. So with that, I'd like to talk to our good friend, Guillaume. So let me get him on. Hi, Guillaume. How are you? Hi, Guillaume. How are you doing today?
I'm good. I'm good. Thanks for that amazing introduction. It's always good to have incredible conversations with you. For myself, I like to just keep it simple. I love startups, working with startups, and the one thing that always keeps me going is seeing those truly driven founders and helping them go from A to B and sometimes from A to Z. So that's predominantly what I'm busy with, and I'm still always fueled by that drive that startups have. And as I'm working with these founders, I'm always also looking at what else can I do? How can I expand the impact that I'm making? And yes, here we are.
So you're going down through it. So how in the world, you've been involved in what is it? Middle Bear was the name of your school you went to. But how did you decide? Did you study business? What did you study in university?
Well, at university, I actually went into information science, and I as I was doing that, I started to notice two things: either the businesses where I was technically involved, they either had a business issue or a tech issue, or third option where the business side didn't speak tech or the tech side didn't speak
You were kind
business.
of like the universal translator.
Yeah, yeah. So that's how I started to look into, all right, how can I get a bit more involved on the business end, because I was getting questions from the tech side as to, yeah, they said they need to make it a bit more appealing. But for a techie, yeah, what does appealing actually mean?
So how did you
and
go through? How did you go through? Going through being a room service employee at the Hilton to having your own company. How did you? What was that journey like to Valley Data?
well, yeah, so from my side, I that the room service stuff, that was just part-time job, paying my way through school. While the own company stuff, that was more or less trying to see if I could start my own business. So while I was doing the whole room service thing, I started just helping startups, or whatever entrepreneur that needed a website. So I started with that. So that's how I started the whole entrepreneurial gig.
And so, you've gone down through, you've had a lot of. I got a question for you. What was Farm Today? Because you were the CTO of Farm Today. What was that? What
Well,
is it?
Farm Today was a it's almost like Hello Fresh, but with only sustainable products. And it was an amazing journey that I went through with my co-founder at that time, Demba. He was the one, the originator with the idea of Farm Today, and really having a platform where sustainable products could be brought on from the farmer actually immediately to the consumer. And we started with one one landing page just to see, like, hey, is there even remotely interest, over to a WordPress website. And then we worked on that a bit and got even more advanced, and then it became a platform. So it was an amazing journey. And also getting in touch with farmers, that's a journey itself.
Now, how was that? What was it like dealing with the farmers?
It's, on the one end, they know a lot more about a lot of stuff than you do, and on the other end, they don't know nothing from nothing.
Yeah,
But yeah, but we met each other halfway because we had an appealing offer to bring their products to a wider audience, and for them to have a more profitable margin. So it was, at the end of the day, you meet each other at the bargaining table.
I got it. So, you've gone down through, we talk about in your journey, Guillaume. So these early stage startups, we want to talk about these early stage startups, but you're right. How do they go down through and stay afloat when they're trying to raise money? Because it's difficult sometimes, especially if you have no traction.
Yeah, so it was. I'll give a bit of context to where we are right now. In let's say the years before COVID, it was it was pretty fair. Let me put it that way, where you basically could get away with just having a pitch deck, and then you need to have your story straight. Then COVID came, and it was the first 6 months. It was a lot of uncertainty, where practically only the savvy investors were actually pulling the trigger on an investment. And after that first 6 month period, almost everybody was getting money. It was
Yeah,
going fast. So even emerging markets, Brazil really skyrocketed and had a couple unicorns, and then became the aftermath of the pandemic, where everything locked up again. But the crazy thing that happened during the pandemic, family offices really started to take notice of, hey, there's a lot more opportunity than the deals we're currently dealing with, so to speak. And so right now you have a rise of family offices, especially in Southeast Asia, where they also want to make major investments, and tech is still very much alive and booming. And to get back to your point, your question, when it comes to raising capital right now, it's a lot more of a relationship building exercise, where it's really, you send your first email out, and from there it's just a relationship that you're building with that particular investor. And sometimes it can be very quick, 3 months and you got your check. But sometimes there's a lot more sweat involved.
and what's the sweat about? What do they do to you? Let's talk about how these early stage companies, how do they raise the money? What are they going to ask them first, these venture capitalists or their family
Well,
offices?
Well, first, one thing that I always notice, that the good VCs, the good investors, they always want to see if the founders got their story straight. And with their story straight, I mean, do they know their industry? That's one. And two, are they motivated enough to really run this company? And if
What do you
it's
think,
a
though,
super,
Guillaume, of the companies that are out there? And you see a lot of startups. What percentage of those startups does the CEO have the capability to run the company, like to take it right through to unicorn? What do you think, like realistically?
Realistically,
No, I'm talking about the startups that get funded. What after they get funded? Because beforehand, we know 9 out of 10 companies fail, right? But once they get
yeah.
funded, what percentage are they really able to be? Do the sales of the company, marketing. They're leading the technology. What percent do you think?
I actually still don't put that percentage too high. I'd still, because it's 9 out of 10 startups fail. And let's say after they get their first check, I would still say 10 to 20% maybe makes it. The thing is, there's a,
Yeah,
you can
you're
say,
right. It's about it.
psychological.
And why is it though? Why is it, Guillaume? So that 10 to 20%. Why isn't it 90%?
I would say with a lot of them, it's a psychological bias where, oh, wow, we got that first check. Woof. But it's supposed to be, okay, we got our first check. Now we need to really go to work. so so
Exactly.
that's one thing that plays a major role with founders, especially non-experienced founders, because if you look at the stats, the ones that go the distance are the founders that already fell on their face like 5 6 times.
So and that's a good point. You're right. They fall on their face, but you look at it. There's like three areas we see: networking, contacts, operational expertise, and access to capital. And our thing is, if you have those three and you have a resilient team, you can turn any company into a unicorn because you can pivot it. Now, everybody talks about pivoting, Guillaume, but they never talk about how you can pivot someplace. And a pivot could be going around in circles, right?
Yes. Yes.
So the key is getting out there and doing it. And when we see it, it's interesting because we see top tier university MBAs inside of GST right now. And Harvard, for instance, the first MBA program was put together to teach managers how to manage, not how to be entrepreneurs. In fact, a lot of the parts of being an entrepreneur are diametrically opposed to some of the MBAs, like taking risk. You know,
Yes.
they talk about calculated risk, but from doing your company, it's like every day you're rolling the dice and see what sticks, right? Do I get it today
Yes.
or not?
Yes. Yes. That's actually one of uh the biggest things that you can't really teach. And that is one thing why only after you failed a couple times that you can make sense of, oh, okay, right now I know why this didn't stick. All right, now I know I can either go left or right, not up or down. So you start figuring out with, you can say, the slaps in the face or the doors that get slammed in your face. Those lessons are crucial for the development of any founder.
Yeah, but there's a couple different ways to learn them, right? One is vicarious, where you watch somebody else and learn. There's another one where you have a mentor environment, or another one you go through it yourself. My thing is, I'd rather go down through and have somebody teach me, right, and tell me what direction I should take because they've already. It's like winning Formula One. You know what corner to take at what speed in order to not flip your car. Come out. They understand it, and it's fascinating to me that there's still this shotgun approach for early stage startups, which is let's throw as much out there. Let's hope that 9 out of 10 are going to fail, 10% are going to succeed. Whatever happens, happens. I don't know about you, but I look at it this way: if you go into a casino, Guillaume, and somebody said to
Mhm.
you, "Come on in, Guillaume, there's a 90% chance you're going to lose, but roll your dice, put the money
Yeah.
out." You're not going to do it. You're like no normal person in the world, I don't think, unless they're just addicted to gambling, is going to go out and roll it. It's so if you know that's going to happen, what do? They take a model where they leverage the risk across
Mhm.
multiple companies, and they said we know, but we know where there's one good one here. My thing, I'd rather take a laser approach to it, right? Let's look at a laser beam coming into even those early stage startups and say these are the couple we're going to bet on, and these are the reasons why.
I,
It's
I would say I would say when looking at that model, um, still only the experienced founder um, takes that mentor or takes that that, hey, let me watch how it goes approach. Because when you first get started, and I had it with my first startup as well, when you first get started, it's your baby and nobody can do it better than you.
I had it too. You know something, Guillaume, and that's why. Remember, this is a true story. True story.
Yeah.
Same thing. So I did a startup. I thought I knew more than anybody else, and I was going to build this thing. And I made a mistake. I didn't listen to my
Mhm.
customers, and I had to sit on that project for 3 years trying to
Mm.
figure it out. And I did it finally, and I made a little bit of money once it was done, but not enough to go through 3 years of pain. It was really painful, sleepless nights, the whole 9 yards, because I made a mistake. I didn't listen to my customers. I should have made what they wanted, not to assume. There's only so many Steve Jobs, right?
Yes. Yeah.
So
The, I
So
think
I
when
hear
it
you.
comes
I hear
to,
you, Guillaume. I agree with you 100%.
yeah, I think when it comes to that approach, the approach itself, it's really, when you first get started, nobody's doing it fast enough, good enough, or however, and then you fall on your face, or make crucial mistakes, like you said, and then you start to wake up. I said, okay, maybe I can use a bit of help, because yeah, especially when you're young, you got energy for days, so you keep on running.
Yeah, no, you're right about it. The thing is, but a lot of times the companies, I see these out in the valley too, they keep going in the wrong direction. They never check with the market to find out if people really want to buy their product or service. They never do pricing models to see if they're going to make any money on it. There's one thing about building. There's another one, I'm assuming that this is going to be able to sell. I mean, for me, it's like I want to do customer development. You go out to 50 people and show them what you have, and then the final question is, will you pay money for this? How
Yes.
much? Well, I don't know, 12.99 a month, 8.99 a month, 30. You can come up pretty quickly. Come up with, listen, is this interesting or not? Do I need to pivot?
Yeah, and that is why I think, that book, The Lean Startup, really started taking off, because I do believe in going in as lean as possible, but also leave a bit of wiggle room in there as well for theory and things of that nature. So that's how I look at it. Right now, in this day and age, you can validate stuff very fast due to all of the social networks and things of that nature. But at the same time, you need to have a game plan before you start going that route.
No, I agree with you. So, you're talking about the raising capital, but how do these companies stay afloat while they're trying to see if they got product market fit? What do they do?
That's what I'm helping startups these days the most, because, as I mentioned, in the early days, you all you need is a pitch deck, floated around long enough, and somebody will pick it up. Now it's a bit more difficult, and working on the relationship is crucial. But with regards to the business side itself, what I keep noticing these days is founders and their teams, they do a lot of work but don't know how to implement it into their capital raise. So, for example, they'll maybe develop a whole new product or whatever, that might have multiple, or other segments that might find it even more appealing than their initial target audience. And so I'm trying to, what I help them with is to identify those types of opportunities. But at the same time, if, let's say, they did make a deal with a particular party, that they get the most out of it. The days of endlessly having a proof of concept or running a pilot for free at a company, that's not viable nor feasible in this day and age, especially if your startup is at the brink of running out of money. You might want to consider shortening that path of just being a proof of concept.
One of the companies, what I had heard one of the well-known companies a few years ago. They were, running lean on funds, so they actually took Cheerio boxes and just relabeled them like as their company. They just took a sticky stick and they sold the Cheerios, or Wheaties. But the point is, you got to be creative, right? You got to figure out how to make
Yeah.
money. Look at Stuart
Yeah.
Butterfield, right? He built Slack, but before that, it was a gaming group, and he
Yeah.
pivoted. And I talked to him directly. We were at Stanford together at a meeting, and I talked to him directly. It's like sometimes you got to think out of the box.
And that's where, um, as a founder, you need a good team around you, or at least one or two people around you that can check you as to, hey, we might want to pivot this way or that way, or hey, this is an opportunity we can get into. But it should really be somebody you trust and respect, and vice versa, because otherwise you will miss that opportunity, or that person will be too scared to pitch that opportunity to you. And then you miss the boat and your company goes down and everybody loses then.
Yeah, no, I agree with you. Listen, we're coming to the top of the show. Closing thoughts, and how do people get a hold of you, Jim?
Uh, from my end, they just go to the website validate.tech, or they can find me on LinkedIn. Just punch in Guillaume Kloof and you'll find me. I'm on LinkedIn, also on Instagram, also just validate tech, and they can get a hold of me. And if I'm not mistaken, there's also a goodie bag of a couple of great resources that we provide at the description of all these platforms where this is aired. So they'll get investor lists, they'll get worksheets, the whole shebang, uh, and they can get started on their own.
No, that's great. Well, Guillaume, thanks for taking time out of your busy schedule to join us today. I really appreciate it. And thanks to all my audience for joining one more time. Simple Nights Presents. My name is Gary Fowler, and I'm your host. Stay happy, stay safe, and stay healthy. And I'll be back to you again with another exciting edition. Take care, everybody. Thanks, Guillaume. It's appreciated.
Likewise. Alrighty.